Divis, despite disappointing the street, the stock was up in trade today, wasn't it, Suyash?
Yeah, very interesting there. This, as you mentioned, Divis has disappointed the street. It came below the street expectations on the profitability front. EBIT and margins were also subdued. Now, let's look at the broad figures first. We'll talk about the stock later. So, net profit for the quarter came in at about 348%, which is about 29.5% of the year ago period, and about 15% shy of our estimates. Revenue, on the other hand, was up about 3%, coming in at 1909 crore. It improved from around 1800 and 545 crore some levels, whereas it was about 1% higher than what the street was expecting. EBITDA, on the other hand, was about 23% lower than the year ago period, coming in at 479 crore in this quarter. Margins also contracted sharply by about 840 basis points, or 8.4%, coming in at 25.1% versus 33.5% in the year ago period. Let's talk about the stock now, Krishna.
Right.
Divis, after the stock initially was trading with moderate gains before the results came out. After the results, there was a sharp decline in the stocks, in the stock prices, and it moved in the red territory. However, the stock also saw a sharp rebound, and by the day's end, it ended almost, I think, 5% higher and was a top gainer in not only Nifty Pharma but Nifty as well. Overall, however, the stock has been an underperformer. On a 1 month basis, it's down about 5%, whereas Nifty Pharma is flattish, down marginally. On a 6 month basis, it's up about 7%, whereas Nifty Pharma is up about 19%. On a year to date basis, Divis has given returns of about 4.5%, whereas Nifty Pharma has risen about 20%. So, I mean, Amit, my question is simple. The results were below street's expectations. The stock, although, ended as the day's top gainer. What's going on there?
Yeah, so I think the estimates were lowered in any case, after the last quarter commentary. So aside from a sort of an unfavorable base, because remember last year the prices really went through the roof because of Russia-Ukraine war. I'm talking about the raw material prices. So most of the analyst estimates had actually anticipated a softening of the overall active pharmaceutical integrated, that is API prices, to basically weigh on these quarter results. But I think after that initial disappointment, which also saw the stock reacting negatively about 1.5%, they had a con call at 2 p.m. And they actually, gave a positive commentary and guidance about the next 1 year. The key segment in custom synthesis that is doing very well. The couple of projects which they are doing with the big global MNC pharma companies, they are now operating at full scale. So one expects a bump up in the revenue and margins going ahead. Apart from that, they recently have a US FDA visit in one of their facilities, and that went quite well, even though the final observations are not out yet. But the management has guided that they were quite pleased to talk about the API industry, and they don't expect any negative surprises there. Apart from that, the pricing pressure in generics might continue for some more time, but that's an industry problem, not specific to API, not specific to Divi's lab in the API space. There was some rise in the end of the September quarter in the API prices of most of the companies, including Divi's. But October starting has seen some dumping from the Chinese counterparts. So that price, which was increased by 5 to 7%, that has sort of reversed. So my overall sense, listening to the con call at 2 p.m. today, was that going forward, one can expect that revenues and margins are going to improve. And I think market sensed that. That's why stock also reacted towards the day's high and ended as a top gain.